Good morning and welcome everyone to this Thursday, May 23rd, 2024 edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host the next 30 minutes or so as we prepare for yet another trading day. Good news going into the market open today as Nvidia posted absolute blowout numbers yesterday, raising their forecast. Really not too much to complain about with that report. And saw after hours, well, I'll give you actually the most recent price in pre-market. But Nvidia up nicely, moving back or moving above 1,000 for the first time. I think recently it's 52-week high was around in the 970 somewhere. But right now it is with about 30 minutes to go before the open, trading at 1,014.25, and that is about 7% above where it closed yesterday and in all-time record high territory. So it does look like Nvidia will at least get the market started on a good foot. But whether or not it can continue or whether it does continue, we'll have to wait and see. But this should open the major indices at yet another all-time high, and we'll see if we make some additional follow through there. I looked at a couple of other stocks maybe that might see a little follow through as a result, one being Super Micro Computer, SMCI. The stock's up more than 6% this morning. That's at $927.94 right now, and up $55 from yesterday's close of $873.27. So really good numbers out of Nvidia, likely to lift the entire semiconductor group. The SMH, which tracks the semiconductors, is up 3.4% this morning. That's at 244.70, closed yesterday at 236.59. So a big leap there. I imagine we are going to see the semiconductors trading at an all-time high. And for those fortunate enough to be sitting overnight, maybe taking that huge risk in the semiconductor bull 3x shares, the leveraged ETF, SOXL, up about 7.6% this morning, jumping nearly $4 from yesterday's close at 49.54. So it's definitely all about semiconductors this morning. See, at this point, we see really little slowdown in terms of the AI space. And I think Nvidia confirmed that after the close yesterday. Things are still rolling in that area. So we may be in store for yet another big surge here in many of those AI stocks that have really absolutely exploded here in 2024. Let's go ahead and start with yesterday's action. We'll walk through it and then maybe take a look at some other individual stocks a little bit later in the show. Start off with the Dow Jones. So let's zero in. We can get that up on the screen. Dow Jones Industrial Average finishing down yesterday, 202 points. Still well above its rising 20-day moving average, but still down is down. Not a great day yesterday, dropping about 0.5%. The S&P 500 dropping 14 points. That was about 0.25%. Still just kind of hovering near its high. I think it's going to get the lift it needs, likely to move to yet another all-time high this morning, unless something changes in the next 30 minutes or so. Nasdaq 100 down 8.5, actually almost 8.6 points yesterday, and that was down just fractionally, down 0.05, but you can see we did carve out yet another all-time high there yesterday. Things still looking good and looking to improve at today's open. Mid caps, the S&P 400 down about 0.8%, and actually getting a 20-day test yesterday. Not a bad area to consider entry, at least from a short-term perspective. If it breaks below the 20-day, you can get back out without a whole lot of damage. IWM down 0.8% as well, moving toward its 20-day moving average, but still residing comfortably above that level. And then the transports, really just got nothing left to say about the transports. I can say that railroads had a decent day yesterday, but it wasn't really enough to lift the group much. It finished up 0.16%, still mired in this downtrend and looking quite unlike most of the other indices, really trailing badly. And oh, by the way, look at that AD line continuing to drop. Just no real positive signs in that area of the market right now. Technology, XLK, up yesterday to lead the market. It was up about 0.23%. The AD line's been bouncing, but even though we are at all-time high on the XLK, AD line still got some catching up to do. So that if you want to look for maybe one negative, that would be it. And it's going to depend on how we finish today. I mean, there's going to be a lot of volume probably on that XLK because it is loaded with semiconductor stocks. And with Nvidia, it does appear that we'll have pretty good push to the upside in Nvidia and in that area of the market. So the gap up is pretty much assured at this point. But what do we do afterwards? If we sell off, you're going to see more deterioration in this AD line. If we do not only gap up, but continue to build on that with heavy volume, then you'll see this AD line continuing to rise along with price. XLV, healthcare in the number 2 spot yesterday in the sector area. XLV, AD line is starting to move up again. A little bit of a bull flag. I mean, we had a nice move up, and then we've just simply gone sideways the last 5 days. We'll see if we can get through that. But even if we do, we got a little resistance up at about 148 from late March. That's going to be the next key area to try to take out on the XLV. XLI Industrials regaining a little strength yesterday, not much, gaining 0.13%, but it does look like a solid cup off of an uptrend and a handle. I mean, this looks like the poster child of what you would see if you flipped open a technical analysis book to cup with handle. Beautiful uptrend, a rounded bottom, nice finish all the way back up to the right side, and then this little lighter volume handle that's setting up. A breakout on the XLI, which would be above about 126.5, that would measure up another 6-7 points. So we'd be looking at about 132.5, 133 on a breakout. That would be our target. So industrials looking very bullish still. Wouldn't be surprised to see some higher prices down the road there. Moving on to some industry group strength, renewable energy. Now, keep in mind that the DW CRE is a renewable energy index, but it follows First Solar very closely. So I can only tell you First Solar has had a really good couple of days. The last couple of days, I think it was up 18% yesterday, and that's what's lifting this DW CRE. But watch those other those other renewable energies as well, because they started to move yesterday. Volume started coming into it. And as I've mentioned often over the years, renewable energy and semiconductors have one thing in common. When they move, they move. And so you can blink and miss a really big, strong move in the renewable energy space. Watch stocks like Enphase Energy today, ENPH, Solar Edge Technologies, SEDG. They were showing some strength yesterday, volume coming in. If they continue to push to the upside and that volume continues to be there, this could be the start of a much, much bigger run than what we're just seeing here. So keep this area in mind. This could be a big run coming up in that space. There's the railroads I talked about. So gaining more than 1% yesterday, which was nice. Still a lot of work to do. I mean, we put in a triple bottom. Yes, the volume picked up. We did bounce a little bit, but there's a lot of work to do still here on this railroad chart. If we don't pick it up, if we don't continue it to the upside, we don't get that breakout. And right now, I would say 3,400 is a really significant level now, resistance level. On railroads, we have seen multiple failures in terms of price action right at 3,400, and that 50-day moving average is sitting at 3,400. So it's pretty clear if we get through 3,400, that would certainly start to repair a lot of the damage in the transportation area, but we got to see it first. And the problem is that resistance has been strong. We now have 3 or 4 or 5 different times where support has been holding down about that 32.25 area. We'll see if that continues to hold, but for now, that's your range. 32.25, 3,400. Clothing and accessories, another big drop yesterday. This group is just can't get out of its way. I saw Lululemon, LU had a rough day yesterday, likely participating or perhaps leading this push to the downside. And this is one of the things in technical analysis I wanted to point out here on this chart that I think a lot of traders get wrong. You'll see a lot of folks talking about, whoa, look at that PPO crossing over the center line, or not the center line, but crossing over its trigger line, which is its 9-day moving average. And that a lot of times would signal strength, right? Show me the strength. Where is the strength? Because when we made this cross, we were at about 290, 292. And look at where we are now. Some strength that gave us, right? This is not a sign of strength. This is a sign of slowing selling momentum. It's here. We're not going down this fast anymore. Now we're only going down this fast. That's what that tells me. Anytime the PPO is below the center line, that is bearish, period. The only thing that would excite me about a PPO below the center line is seeing a really nice positive divergence form and then following it up with price action that moves back and makes some key breakouts. You can see clothing and accessories never even got back through its 20-day moving average after taking a huge tumble and the 20-day EMA tumbling right down with it. Its reaction couldn't even get back through that level. So you can call this bullish if you want. I see nothing bullish about it. It's below the center line. And plus, we had gone straight down. I mean, got to bounce. You got to at least go up at some point. You can't go down every day, can you? So we bounced for a few days, dead cat bounce. And that's what a lot of folks want to construe as strength. I'm not buying into it. Never have, never will. That PPO needs to be above the center line. Anyway, that is it for that. Let's move on to the 10-year Treasury yield. So 10-year Treasury yield this morning sitting at 4.43%. That is down about a half a basis point. But do we put in a lower low? Are we rolling over here at these moving averages? I think this is the real critical question on the 10-year Treasury yield. I have been saying, telling members 452, 453. I think that's a really key resistance area right now on that 10-year Treasury yield, because if we can get through, we will not only clear the reaction high, the last reaction high, which would stop this series of lower lows and lower highs, but it also would clear both moving averages. And you can see right now for the last week, that's what we've been up against and struggling to get through is just one of these moving averages, not both, but just trying to get through that 50, 20 coming down. It's going to be a lot of resistance for the yield to try to get through those moving averages. But to do that, and then on top of it, get above that last reaction high, changes the character of this current downtrend. So watch for that to the upside. To the downside, I mean, this right now is in a downtrend. I see a move down below the 20-day moving average, a bounce that could not clear the 20-day moving average, another low, watching the 20-day drop, 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 and then this rally that we've seen here over the past 6 trading days has not gotten back through those moving averages. So what are we going to do here? Which way are we going to go? Are we going to break out above the moving averages, get back up above 453? Or are we about to roll over and have some more of these big red candles and watch the 10-year Treasury yield maybe drop back into the 420s, even the 14s? You can see the low that we had back here. That was at about 406, 405. This low was closer to about 420. We had this low down around 430. So we've got levels that we're going to have to clear for this to continue moving to the downside. But right now, short term, until we get something else, it looks to me like the 10-year Treasury yield wants to roll over. That would be the most likely scenario. Not a guarantee. I can't guarantee anything. The yield might be back at 5% in a week. I don't know. But based on the way the chart's setting up, I believe the most likely scenario is that we roll over here and move back down on the 10-year Treasury yield. And if that happens, that would be a good thing for small caps in particular, but the overall market just as a whole. I mean, there are a couple of things that drive the stock market over time: earnings and interest rates. We're seeing companies like Nvidia, one after another, post blowout earnings. If you move into an environment where rates are starting to come back down, that's nirvana for equities. So anyway, that's what I would expect. I would expect that 10-year Treasury yield to roll over. Moving on to the S&P 500. Well, this flag just continues to print, but let me give you the numbers right now on the major indices. So right now we've got the diamonds, which track the Dow Jones, up about 0.2% this morning. We've got the spider, SPY, which tracks the S&P 500, up 0.2%. So in S&P 500 point numbers, 2/3 of 1% would probably be somewhere around 35 points. So where did we close yesterday? 53.07, add 35 points. That's 53.42. That would be another all-time high. That's what we're looking to close at, or open at, I should say. And that'll take place in about 15 minutes. The QQQ, which tracks the Nasdaq 100, of course, this is going to be impacted the most by Nvidia and all of the collateral gains that we're seeing in that area of the market. But the QQQ up more than $5 this morning, over 460 now. You know where we were back at the bottom in October of 2022? I think we were down at about 255. We're now more than 200 points above that level on the QQQ. Pretty amazing. It's been less than 2 years, but very, very strong move coming off of that bottom. So 460.85, that's up 1.13% this morning. The IWM right now is up about 0.4%. And that is back over 207. It closed at 206.61 yesterday. So that's risen back pretty nicely. But anyway, futures are pointing to a pretty decent open across most areas of the market. And then we'll see where we go from there. But not bad when you're looking down from an all-time high position. That's essentially where we're going to be at the market open today. The NASDAQ 100, looking here, kind of similar, except instead of going sideways like the S&P, we've actually continued to move our way slowly higher. And I've talked about a low VIX environment and what that looks like on the S&P 500. And it usually looks like pretty boring action. You normally don't see huge 2% gains daily, anything like that. It's usually up 0.5%, up 1/3 of 1%. Then you might go down 1/10 of 1%. Then you go up maybe 0.15%, then up another 0.08%. It's just this slow, boring crawl to the upside. That's kind of what I would expect with the VIX where it is. Get the occasional pullback. I thought yesterday at 2 p.m., the Fed minutes came out. And I think that gave mainstream media one more reason to just run with it, because they talked about the fact that they're still nervous about inflation. Wow, that's big news. They're nervous about inflation. They're still not quite sure about it. That's breaking news. I mean, we've only been talking about this now for 3 years. So since that meeting that the minutes pertain to, we've seen non or less inflationary data. Actually is looking like inflation is getting more and more under control since those minutes. And yet, let me show you what the market did when the minutes came out. Acted like it was something they'd never seen before. Let's pull up. Here's the NASDAQ 100. That's 2 o'clock. So 2 o'clock to 2:30. Let's pull up. How about the S&P 500? Look at this, starting to come down around 110, 120, but then 2 o'clock hits, the minutes come out. Look at this to the downside. I mean, to me, it's just an opportunity to buy when that happens. And sure enough, we rallied back into the close. Now Nvidia reports, and we're all back at all-time highs. Like this never even happened. But it did scare a lot of folks, I'm sure, out of their positions because of the new inflation news that was out. If I sound like I'm perturbed by the media, you all know, most of you anyway. If you've been following me, you know, don't pay attention to the media. They're looking for a story. They're trying to sell. They're trying to sell ads. They want visitors. They're posting whatever they can. Train wrecks sell. Boy Scouts don't. That's the way it is. You know, you got to find something bad. So they're going to jump all in. Wow, look at this. The minutes are talking about the Fed being concerned about inflation. Breaking news. Anyhow, IWM. IWM, a little weaker than the other indices, especially this last week or so. One reason, obviously, technically, is that we're up against some key resistance, but that didn't stop the S&P 500 and the Nasdaq from going through. So, yeah, I'm a little concerned that the IWM continues to underperform. I'd be even more concerned if rates were to drop, back into the 20s, 220, or excuse me, 420s or 410s, and we still haven't gotten a breakout on the IWM. That would be very concerning to me as far as where I thought maybe the small caps were headed. But I don't think that's going to be the case. I do think if rates go down, we're going to see this breakout on the IWM. So I'm continuing to look for that strength. Transports, as I said, I don't know what else to add that I haven't already said the past several days and really probably last several weeks. We looked like we were going to break out back at the end of March. Looked really good. We were moving up, testing this, what became a triple, quadruple top, pulled back to the 20-day moving average and went up and actually closed at our highest level that we had seen since probably early August the year before, and then just completely fell apart. Down, a little bit of strength, new low, head fake, back down. And like I said, now it's this constant movement that we saw earlier in the year between being below the moving averages and being above the moving averages. We just went above a week and a half ago. Now we're back down below. Maybe next week we're back above. I don't know. But this is simply sideways consolidation, and it's not playing into the strength that we're seeing in the overall market. I got nothing else to say. It's a weak area. It's one of the weakest areas until we start to see some relative strength. I think the transportation group, you got to be really careful. Maybe you can find, one or two winners here or there, but to trade the overall group, I think would be a mistake. And honestly, when we made this move, I thought we were ready to make this turn on the IWM, or excuse me, on the IYT, which is the ETF that tracks the transportation group. So right in here, we decided to jump in with a small percentage in our model ETF portfolio because I thought this group was ready to roll and that this was going to be a head fake. And it looked like it for a little bit and then right back down again. So still looking for that strength to confirm what I thought was going to be a bottom back in the middle part of April. Let's see, what else do we have? Well, we got chart of the day. So let's go ahead and get into that. And we've got probably about 8 more minutes to go. For the chart of the day, first of all, if you're not an EB Digest subscriber, that's our free newsletter. Please go over to earningsbeats.com. You can scroll down and you will see right here an area where you can subscribe. No credit card required. You can unsubscribe at any time. But I will send you 3 charts a week, one on Monday, Wednesday, and Friday, talking about some of the things that are important to us. So price volume, obviously, relative strength, candlesticks, trend lines, moving averages, earnings, gaps, all of those things will be covered. I'll even throw in seasonality from time to time, sentiment, lots of different things I think will really help to provide some education, or maybe just add to, what you already use. But I think it would be a good thing if you haven't already signed up to check it out. Again, it's free and you can unsubscribe at any time. Also, I'm going to continue to mention until this deal is over, this is the best deal we have on our paid service all year long. Our spring special is in effect. It will remain in effect until midnight, June 2nd. So you got 10 days left, but don't delay. Moving on to the chart of the day. So I wanted to mention a stock that recently reported earnings, gapped up, looked nice. It did gap up below the double top that we saw. This is obviously really small for many of you on your screen right now, but this is MNDY, the symbol. You can see the double top up there. We gapped up. This was actually one of the stocks that we were looking for possibly as a one day shorting opportunity. And so it was in our trading room. I think this was a Wednesday that they reported. And we actually took a short position, but kept a very tight stop and ended up getting stopped out with a very small loss. But the stock has continued to move up, and look at the volume trends. Big volume on that move up to finish above the open. And then it's continued moving up with above average volume most of these days. So, and it's made a breakout above that double top in the process. So this is the type of stock that I would now have on a long watch list. I think if the stock were to pull back into this 230 to 240 range, I think you'd be getting in at a pretty good spot. Maybe an outside chance we go all the way back to the top of gap support on the next move down. which would be just below 220. And that might coincide with a rising 20-day moving average as well. That would be best entry, but I'm thinking the entry around 230, 232 wouldn't be bad as well. So keep all of that in mind on that stock. And last thing I want to do is go through the scooter reports over at StockCharts. So we got about 4 minutes here. And if you go to scooter reports, let me just show you how you get there first. So if you go to your dashboard and over here under member tools, you can scroll down. So you'll have member tools, you scroll down, there's charting tools. Then you keep going down, you have summary pages. It's under summary pages right here, scooter reports. So what StockCharts does is it provides you in each the large cap, the mid cap, and the small cap, the highest scooter scores of all the stocks in that asset class. Now, what's the scooter score? Well, it stands for StockCharts Technical Rank. And so it is a relative strength kind of a calculation developed by John Murphy. That right there means a lot to me. I have a lot of respect for John and all his work over the years. I will tell you the one limitation is that it doesn't take anything into account beyond about 5 or 6 months. So, if a company has been, really good for the last 5 months, let's say a chart's been going down, 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 down for 10 years. And now it's in a period of really good 5-month period. You look at the long-term chart and you think, this is probably just a dead cat bounce. But if you looked at a scooter score, it'd probably tell you it's the best stock in the universe. And so that's the one thing. Keep that in mind. Scooter score is good for the last 5 months. It's a really good relative strength indicator for the last 5 months. There might be a couple other little tiny flaws in it, but for the most part, I think it's a good relative strength indicator. So you can see MicroStrategy, number 1 right now. So there's Super Micro, number 3 on the list. Probably got Nvidia down here. Here's Nvidia. Got Moderna. So Moderna is kind of an example of what I was giving you. Moderna had been going down for a couple years, but recently it has started to move back up. Let's take a look at the chart. So remember, going back 5 or 6 months, yeah, this thing looks awesome. I mean, I've been talking about it. Actually, sign up for the EB Digest. I put this one in the EB Digest on this breakout and talked about on a pullback to 116 would be a great entry. Well, we got down to about 117 or 118. Didn't quite get to 116, but look what's happened to the stock. That was an EB Digest just a couple weeks ago. So these are the kinds of things that you could be getting if you're not already an EB Digest subscriber. So make sure you check that out. Anyhow, what I'm saying, though, is this longer term. Let's go to a 5-year weekly chart and look at how bad Moderna had been as an investment for 2.5 years. But it has a 4-month stretch, or even probably 6-7 months if we go all the way to the very bottom. But this is like the poster child of what I was just talking about. So is this a great company, great stock, or is it just a bounce in an otherwise downtrending trend? Here, I mean, I would maybe argue that it's temporary, but it still has room. I mean, to the upside, we got a lot of tops coming up here at about 200. So I think it could hit 200. From there, I'd be a little bit more cautious. And obviously, even from here at 163, $37 to the upside. Where's the 20-week moving average right now? 112. That's $51 to the downside. 37 upside, 51 downside. Doesn't sound like a great risk reward right now at this level. At 118 or whatever, even at 125, yeah, the risk to reward was awesome. Or reward to risk, I should say, was awesome. But anyway, that's Moderna. So just to give you an idea of how the scooter reports work and scooter itself. So again, Moderna, top 5. Is it really a top 5 company? I wouldn't say that. I mean, I can think of a lot of companies that if you told me I had to own for the next few years, I think I'd rather own over Moderna. But over the 5-month period, I think it depicts relative strength very well. That chart certainly looked like it deserved being in the top 5 if we're just looking at the last 5-6 months. Another thing you can do here, there's this change column. So you can go back and say, okay, over the last week, because there's the period. So let's zero in there. You got this period. So over the course of the last week, I want to see what has changed the most in scooter score. So in other words, are there stocks out there maybe they've gone from 20 to 80, rising 60 in their scooter score over the last week? If so, something may have just changed. So let's sort this. And there's one that went up by 60, pretty much from 20 to 80. ZTO Express, it's an industrial business support services area. Let's see what happened to the chart to make that happen. It was a gap up, probably earnings related. And look at this. Now we've got a downtrend that's been broken. And I mean, perhaps we had already started the uptrend. Looks like a little move up, nice little cup, little handle and a breakout. That would measure up probably to about 25, which we've already hit. Doesn't mean it's going to stop there. That's just the initial measurement. But yeah, I mean, this thing seems like it's changed course for the positive back to the upside. Maybe this is an early signal. What's that long-term chart look like? How about monthly, 15 years? Is this a good stock? Yeah, it was back, into 2020. And then, while the market was taking off, this has been a horrible performer. On the monthly chart, does it look like we've done what we need to confirm a move back to the upside? I don't know. It still looks like downtrend. Maybe if you get through the 50, and certainly if you get back through about 28, 29. But on the long-term chart, I think we still have some work to do. So yeah, ZTO made a huge move in its scooter number, but that doesn't necessarily mean that it's one of the best stocks out there. But it is rapidly improving in terms of its scooter score. But you can pull this up also for mid caps. So there's the 1 week change, mid caps, Doximity, Verb Biotech, ENVX. Been talking about this one with members, talked about it the other day. It's a big short squeeze stock. And the stock had done pretty well, though it did back off of highs yesterday. But a lot of volume coming in on a recent move because of a short squeeze. So does that mean that's a good stock, or is it just temporary because of the short squeeze? I don't know. But this change does at least point out to you some stocks that maybe you should be investigating. All right, we have started the day. I'm going to go ahead and close this out and take a look at what the market's doing. Dow down 0.2%, S&P up 0.4%, Nasdaq up 1%. Record highs for those last two. S&P 500, S&P 600 small cap just up a fraction. So giving back some of those gains. Mid cap, same thing. Started up, came back down. We'll see whether or not we can get strength into the close. There you go with Nvidia and SMCI. Top two stocks in the S&P 500 starting out. Nvidia up $72, SMCI up $58, 7.6 and 6.6% respectively. But you see some other, you got Micron in here, you've got AMD, you've got Applied Materials, number of semiconductor stocks going up in sympathy with Nvidia. The group is strong. Let's see how we finish, because I believe semiconductors now are in all-time high territory, and they are. Big gap up there on the DJUSSC, which is the Dow Jones US Semiconductor Index. Anyway, that's it for me. Last show of the week. So have a great rest of your week. Enjoy your weekend, and we'll be back to do this again at the start of next week. Next Tuesday will be our next Trading Places Live show. Of course, members, I'll have the daily market report coming out today. Of course, John Hopkins will post a brief update tomorrow. We'll get our weekly report out the beginning of the week. So you got a lot of things that we'll be talking about as far as where we see this market going. So be looking out for those. Have a great day, everybody. Remember, click that like button, hit that subscribe. Don't miss another show that we have here on YouTube, and have a great weekend. See you, everybody. Happy trading.